What's up, everybody? Welcome aboard to Bubba's Bottom Line. Todd Bubba Horwitz with you here today. And of course, not only do we do the updates on a daily basis, but we also do our weekly show. And today, we look back at last week and what do you got? Well, the markets go up every day. It's the new thing, right? We've had Janet Yellen come out and tell us that there'll be no more crashes in our time, and of course that reminds us of Maynard Keynes, who said in 1928 there'd be no more crashes in our time, and he only missed by about 15 or 20. Look, we are where we are. We've got margin debt reaching levels of all-time records. We've got complacency at all-time records. We've got the VIX at all-time lows. In the meantime, the markets go up, and we're not going to fight that. If we go back and look at last week, we can see that we were up every day except for Friday, and Friday was a jobs number. But when you look at it and you understand it, you can't fight this. Every day, higher prices, lower volume, lower volatility. What does it mean? Well, what that really means is that the markets, the cycle is ending here or slowing down, and what you're going to find out is that eventually the markets will sell off. And I'm not telling you, again, this is my weekly story. I'm not telling you to get out. I'm not telling you to sell here. I'm just telling you to pay attention. I'm telling you to be careful, all right? And if you're borrowing money on margin to get in, you should be slowing down, all right? You can't buy stocks on money you don't have that you can't pay, all right? Because this eventually will create the overall market meltdown. You cannot continue to try to press down this market and think that we're never going to go down. And it doesn't take a big sell-off to force you out when you're trading in on margin, all right? Because again, when you're trying to leverage up, you end up putting yourself in a much bigger position of failure. But again, the markets are going up, and we've had about a 2% increase, and certainly not very much considering the excitement surrounding the market. We've got all the analysts, all the pundits, cheerleading the market higher. And I'm not saying that they're wrong, all right? This is the point here. When you look at the markets, when you look at what's going on, there's no reason for us to be up at these levels. We are certainly at levels that we have not seen since 1929, based on valuations, based on everything else. But at the end of the day, the markets are still going up. Now, when we look at the bigger picture, it simply tells us this, that right now buyers are buying and they're pushing the markets higher, and it's on thin volume that continues to drill up. Now, when you look at we'll call it the melt up, all right? You can't try to decide that the markets are no longer going to be able to melt up, because right now they are. And we're not going to say it can't happen. What we're going to say is that we're watching, we're waiting, and we're looking. But in the meantime, there are always individual stocks you can buy. There are always things you can do to give yourself an edge into the market. But it's not to chase up the big bad wolves. The FANG stocks right now are extremely overvalued. But looking at the jobs, all right, now, of course, the government had a built-in excuse of why jobs are not going to be as good this last month. They had the hurricanes to depend on. So they were in like a no-lose situation. Now, the markets did sell off a little bit on Friday, but it certainly wasn't anything that would be, we would think would be to worry about. I mean, if you figure out we're up 7 days in a row and we go down $50, not a very big deal, all right? So these are the things that you have to learn and understand about markets, is that they're going to do what they're going to do. And we put ourselves in a position to force everybody into only one asset class. So the jobs number was minus 33,000. Again, we don't have real good jobs coming anyways. This is not like we're missing out on anything. The jobs numbers themselves are mediocre at best. We're not seeing what we would call the true growth of the market, because companies are not spending money. They're not spending, it's called CapEx or capital expenditures. They're not spending money to buy. They are simply buying back their own stock, cutting back on expenses, cutting back on employees, so that their balance sheets looks good. Now, it's great for the shareholders. That's great for the CEOs for get bonuses, but it's not so great for the economy. It's not so great for the average working guy. Now, we've got all kinds of talk about tax cuts and what's going to happen with these tax cuts, and of course, the markets have priced them in, I think, pretty well. If you look at the old story, you buy the rumor, you sell the news. Even if we get the tax cuts, which I do not believe we're going to get, all right? But even if you do get them, does this mean that we're going to the moon? Markets are very much forward thinking, so they've already priced in a lot of this information. So only, in my opinion, only two things can happen when it's done, and that is the markets can get the tax cuts and then they'll sell off, or they're not going to get them and they're going to sell off. But again, this is a timing spot that we can't really time. You can't figure out when this is all going to take place. You can only try to understand it and be aware that it is going to take place. But jobs, 4.2% unemployment. What does that mean? Well, it means a lot of people are working based on the way they count. Now, their cockeyed math of counting is not very good, number one. But number two, what we have to look at is the types of jobs that we're creating. Now, there are millions of jobs available, all right, except that those jobs, most people that need them are not qualified for these jobs. You have to remember who is out of work for the most part now. The big part of people that are out of work are industrial workers, manufacturers, machinists. Those people aren't going to be able to go get the education to become coders and computer people. This is an issue that nobody wants to talk about. Right? Now, yes, there are jobs available, but they won't be filled until kids start getting there. Because most of me, I'm lucky I can turn the computer on. All right? Now, this is an issue that is plaguing the street. But the other issue that is plaguing the street is the inability for companies to spend money. CapEx spending, capital expenditures. They're cutting down on employees. Why? Because healthcare is too expensive. You have to remember, when you hire a person to work for you, let's say you pay them $10 an hour. I mean, it doesn't matter, numbers immaterial. But that 10 is really like 15. By the time the employer finishes paying his share of taxes, his share of Social Security, if he's paying for your insurance, that payroll goes up astronomically just on back-end costs that nobody ever talks about as well. So the cost of healthcare is destroying the ability to hire new people. And I don't blame the companies. I mean, their jobs are to make money, and they are making money. But I do blame the way that it's reported, because again, middle America is sitting on a crapper with no hope right now. Right? This is something that has to be focused on, and this is the thing that we keep ignoring. Right? Now, we are starting to see the Federal Reserve have what we would call a more hawkish tone, right? And rates are actually going up. All right? Now, they have not officially raised or hiked rates from their side, but when the bond market continues to fall, rates are going up automatically. Now, if you've noticed, if you've watched, the banking sector, the financial sector has been very strong. Why is it? Well, because now they smell the opportunity to make more money, because with the rates higher, they're going to be able to go ahead and start lending money, and they want to make the money. The banks are trying to make what they call the spread. The spread is the amount that the bank borrows from the Fed, okay, minus the amount that they lend out, and they want to make that spread. Well, when interest rates are at, let's say 2.5%, 3%, there wasn't a big enough spread. But now that they're starting to climb, all right, it gives them a wider percentage, means more profit for the banks, means that they will start providing some liquidity to the average small company. And there's where the inequity comes in this world, is that big guys and little guys aren't on the same playing field. All right, that's why we've had so many issues. That's why these markets are not in very good shape, because it's all unbalanced to the minority. I believe the number is 5% of the population controls about 90% of the stock market. Now, the number could be close one way or the other, but at the end of the day, what it really says is this is just a program to help the wealthy. Now, the wealthy always do well under any circumstances because when we're in boom times, all right, they're already in. And when we go into bust times, they have the capital to come back in and accumulate assets at a much cheaper price. So that's one of the reasons we see the markets continue to drive. Pension funds are putting their money in, 401ks, all that money flows in. So we have this dull market cycle right now. And the dull market cycle is simple, all right? There's a lack of sellers in the market, but we've got buyers. Now, we've got buyers every single day, all right? And you always hear the story, there's always money on the sidelines. There's always money on the sidelines. But what you have is you have money coming in every day and a lack of sellers. You have a lack of people that want to get in and fight the overall market. And I think this is something that is worth looking at because eventually sellers will show up. Now, in the commercial department, many banks and many others are already massively short this market. But it's kind of like a boxer. They're allowing the markets to carry on and move higher, all right, until they're ready to jump in. But it does make it extremely hard to be an active trader in these markets. It makes it extremely hard to have some real activity because of the lack of free capital. It goes back to, we've talked about many times, the velocity of money. But at the end, what you've got is you've got problems. And the problems are simple, all right? The middle class is not participating in this big fancy market. And if you look at values of home prices around the globe, if you look at other values, you see that we're not seeing a dramatic amount of middle class participate. So yes, the markets are going higher. And again, I'm not going to tell you they're not going to go any higher. I expect this to continue for a little longer, because again, as long as the markets remain dull, as long as volume falls every day, as long as volatility continues to fall, there's no reason for me to expect any major moves in the market. Very important to understand that we don't have major moves when there's not much going on. So the markets will continue to climb, as they say at the Wall of Worry. The markets will continue to do what they're doing. In the meantime, you, as yourself, as an investor, as a trader, should be looking for opportunities that will help you and are things that you would prefer to own. But you have to remember that you have to be able to pay for them and not borrow to pay for them, because you'll find yourself in a much bigger problem when that's all said and done. And these are things of major importance to all of us, right? As we sit back and try to understand what the market's going to do next. Let's not be from the school we're trying to guess the top of the market. Let's not be from the school that we're overvalued, we can only go down. All those things are true. However, until the market proves that it's going to sell off a little bit, there's no reason to try to sell that market. All right? That's very important to understand. In the meantime, this is Bubba's Bottom Line, Todd Bubba Horwitz, and we're going to step out here for a break. Make sure you check out the Bubba Show every single day at libertytalk.fm, and make sure that you check out all of my stuff at bubbatrading.com. In the meantime, I'm going to step out here for a break. I will be right back with more of Bubba's Bottom Line right after the break. Bubba's Bottom Line, Todd Bubba Horwitz. Welcome back to Bubba's Bottom Line. It is me. It's Bubba. What's going on, everybody? So, all right, now let's look at some of the other issues that we have going around, and the first would be Puerto Rican debt. All right, now, how could a small island with such a small population create such a large debt? And of course, you heard President Trump last week say that the bondholders might have a little problem here. And of course, markets, countries, businesses work on floating new bonds. All right, when you need to raise money for something, you put out a bond issuing either, and typically there's sometimes CDOs, collateralized debt obligations. They come in there's revenue bonds, all different kinds of bonds. But the Puerto Rican bonds have now dropped dramatically and are trading at about 40 cents on the dollar, which means that if you buy them and you're right, then you're going to make a ton. 60 cents on the dollar. But at the end of the day, all right, you take that risk. Again, one thing we like to talk about all the time is this major reward that we're all looking for does not necessarily come, all right, without risk. Okay, so when a company is willing to pay you bigger dividends, or when a country is paying high interest on bonds, what is that telling you? That you're taking a much bigger risk. Okay, that's all. It's not a bad thing. It's just that's the risk that we have to take. But I don't know how Puerto Rico is ever going to get out of the debt that they're in, and most likely, or a big case of it, a lot of that debt is going to have to be forgiven. In other words, you're not going to have to pay it all, and that will create a big story along with the Puerto Rican bonds and with what's going on in the overall economy. Now, some of the other things that are going on that are very, very scary. Europe, I would say, is probably within months of falling apart and failing. Their system of more of a socialistic view, anyways, is problematic. But now all these pensions are coming due. The world is getting older, and when all these pensions comes due, I don't know of any of the major pensions that have enough money to cover what they would have to pay out. And that's the fallacy and the breakdown in the pension system, which is the simplest one to use is Social Security, because of the way that it was designed. It was designed by Roosevelt to pay you out at 65. But of course, when the system was put into place, the average living age was only 62. So they assumed that many would die before they would collect their benefits, so that the pool would remain constant. The difference is now, though, that the average living age is about 75 or 77, which is why retirement age has to move higher. Now, we know that none of our politicians are going to get us higher because they want to keep getting elected. So that becomes a real problem, okay? Now, when you take into consideration, all right, everything that we're looking at, all right, the lack of jobs, no money, no building, no growth, and so on, you can see that overall we've got much bigger problems and much bigger things to look at. But right now you've got the Fed that continues to try to print money and tries to support this market. And again, it is interesting that with their new, more hawkish tone, we have not seen more selling. But again, this is what they've really done is they've pigeonholed you into a spot that you can only invest in one thing, which is the stock market. Now, I don't know if any of you are Seinfeld fans, but Jerry Seinfeld said to George Costanza once about the Germans and goose stepping down the street, and of course, telling everybody, come on in, take a shower, and of course, we all know what happened there, right? And I think this looks like what the Fed is doing here. Is like everything's okay, come on in, take a shower, as they goose step down the roads. I think that this is going to be a very nasty breakdown when it comes. But again, when it comes is tomorrow, a year from now. There's no way to know when that is going to happen. But what you've done now is you've loaded up one investment class with every investor dying to get some yield and some return. And if you don't, once that changes, all right, and if interest rates continue to rise, then you're going to start to see money start to outflow. And as that happens, that will create a panic. But for now, again, there's no reason to believe that there's anything else out there, okay? Because again, this is the grand design of the clueless people that run our Federal Reserve. This is a classic sign of the clueless government that we have right now. This is what we have when you look at what's going on with Trump. Okay, Trump is a business guy. He's trying to create this into a business model, which is the correct way to run it. But nobody wants to do that because it cuts into everybody's paycheck. It cuts into their wallet. It cuts into their lobbyists that get them all this money. This is the problem with America today, is we've got too many people doing too many things, and there's too few of these doing it that are benefiting from everything that's going on. This is the bigger problem that eventually will cause a bust. Bust and boom cycles happen all the time. They've happened forever. So this time is not going to be different. It's just a question of when is it going to happen. the characteristics that we see today are no different than the characteristics you saw in 07, 08. You know, I go back to 2004 when we had almost this type of identical type of trading, which is nothing going on. Now, in 2004, at least that was in August, which is summer, is expected to be quiet. In 2017, we're in the fourth quarter and we're getting that kind of trading. This is complacency at its highest. And there's an old saying, complacency is the architecture of our downfall. And if you don't think that that will change something, just keep watching, again, and just keep throwing all your money in. And again, I'm not telling you not to get in, and I'm not telling you to get out. I'm telling you to be very careful here. That's my only words is to be careful. You've got a country on edge, okay? You've got imbecile professors at UNLV blaming the shooting at UNLV on Trump. You've got people complaining about everything. They want to take away our Second Amendment rights. Now again, I'm a firm believer that guns, listen, I wouldn't own a gun, I'd be afraid I'd shoot myself. But I believe in people's right to own them. But my concern is that why are we trying to cut down those that are legally licensed to get guns to allow the criminals? Because criminals are always going to get guns. Criminals are always ahead of the game. So why is it that we want to cut back on the people that are getting them through the legal chains? At least that way you know where they're at and you know if there's a problem. Right? Most things are done illegally. Right, now I know the tragedy in Las Vegas. I mean, I was there. I was 1,000 feet when it was going on. From there, I was right in front of the Mandalay Bay, so I know what is happening, and it's a tragedy. And certainly my thoughts and prayers and condolences go out to all of those who might have been affected by that. I mean, we're all affected emotionally, but we have to understand that we can't give the criminals a leg up. Remember, this country, we don't do anything until it's too late. We aren't prepared for anything. It's the cybersecurity, bombings, the terrorist attacks. If we would step up and become what we are, a stronger nation to begin with, we wouldn't have a lot of these problems that show up here. All right, that's one of the things, but that's a story for another day. But at the end of the day, what we have here is we have a big mess building between the markets, between the people that are not working, between the terrorists. This is all melding together. You know, we all think it's in separate areas. The end of the day is, if you're not making enough money and you can't afford to eat, you can't afford to do things, you will do things that are a little bit outside of your mind. And it has to be changed. And that's why this whole situation that we're watching right now, and we're watching this unfold, is creating the bigger problem. That's why we see a lot of money running to the cryptocurrency space. That's why we see many of these issues that are out of control because of just what we're talking about now. Because we're so mixed up, because the government is so mixed up that nobody has a clue what to do next. And that's where I think you see a much bigger problem. You know, this is where problems are created. And this is also Amazon, which will be the topic of my opinion piece today. But this is what they've also created a lot of these issues. And you're looking at me and say, well, what are those issues? We will get them right after the break. When we come back with more of Bubba's Bottom Line. This is Todd Bubba Horwitz, Bubba's Bottom Line. Make sure to get the Bubba Show every single day at libertytalk.fm, 2 to 3 Eastern time. And also make sure you check out bubbatrading.com and see what we're doing over there. We will be back after the break with our opinion piece right here at Bubba's Bottom Line. We'll be right back. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And of course, you know, every week I get to spew out my opinion. And, you know, I want to talk about Amazon. And I want to ask the question, can anybody beat Jeff Bezos? All right? And, you know, he's not, look, I'm not taking anything away from Jeff Bezos. I don't particularly care for him, but I don't hold anything against him. He's smart. He figured out a model, and he's been pounding away ever since. Now, what he has done is he's effectively put out of business just about everybody. Basically, if you look today, what do we have? We've got 2 retailers, Walmart, Amazon. You know, Target's in there a little bit, but basically you've got the 2 main retailers. Now, when Walmart first came into an area, They systematically put out a lot of small business. And now Amazon comes in and they took out the rest. So now we've got boarded up malls. We've got strip centers that are empty. We've got it very hard for a small independent entrepreneur to come into that business now, into the retail business. And why? Well, because Jeff Bezos was smart enough to put prices out that nobody could compete with and break everybody. I mean, look, I use Amazon all the time, all right? And because why? Because it's worth the same price, if not cheaper. It's delivered to my house. I don't have to leave. I don't have to waste my time. But my concern here, and there's nothing we should be able to do about it. I mean, I don't want the government to step in for sure. But at the end of the day, there has to be something that we should be able to try to do here, because what's going to happen when they finish and polish off the rest of small business, then do they raise their prices? Do they start to stick it back to you now? This is always the issue. You know, we've seen this many, many times, price fixing, all kinds of things. But could it happen that Walmart and Amazon at some point work together here to systematically raise their prices, to raise their profit margins, to take away from you and me? Okay? That's always the problem that I see with what's going on, is that the way that Jeff Bezos has been able to operate, and there's a lot being said about the taxes that they don't have to collect. So again, you save on some taxes in a lot of places. But do they come back at higher prices later? Do they start to squeeze their prices higher because now they've wiped out competition? You know, that's the beauty of America, was always the free market system. And we've gone into a place that we no longer have free markets. We've gone into a place that is now a much more controlled environment, either by the Fed for money, the government for regulations, and then you've now got a couple of retailers that pretty much have a free roll and a free hand here at what they do. Now, I'm going to guess that, you know, this Christmas season, this holiday season, will probably wipe out the rest. We've already heard a big company, Toys R Us, is going to file for Chapter 11 or Chapter 13 or 7, whichever one they're going to do. But this is something that is going to have a direct effect on all of us when it's said and done, because once you wipe out everybody, so now, you know, I don't know, let's use a gallon of milk. Let's say I'm paying $2 for a gallon of milk. All right. Well, now that nobody's here to sell it, does it go to $3? Does it go to $2.50? They're going to have a way to pad their pockets. They're going to have a way to make more money off of this deal. You can bet right here, you heard it today, okay, from me, Bubba, right, that these prices are going to start to go up. This is no different than anything else. And right now, what do we see? Like, you know, if you use the perfect example, is gas stations, for example. You know, you go to a gas station, they're going to be within a penny or two of the one across the street from them. Right? They're all like that, and they all make plenty of profits. So what you're going to see here is, I believe, is something that's been done. It was done in the vitamin industry many years ago, that you had some price fixing, that we set a handshake because there's enough business for everybody, and said, okay, now let's start to raise our prices. You won't go below, you know, $1, and we won't go below $1. We'll make them close in the same neighborhood. You know, you can have the edge on this, we'll take the edge on this. In the end of the day, you've now figured out a way to steal more of the average American's money, because you've wiped out all competition, so there is no price competition, and you now put yourself in a position to raise your prices because nobody's going to undercut you because there's nobody there. And that's the problem when you allow companies to become so big, okay? And that was more due to regulations, not that what they did. You know, Jeff Bezos did a great job at reinvesting. The stock has done extremely well. I don't quite understand that yet, but hey, it is what it is. But at the end of the day, the governments, because of their regulations, allowed Amazon to systematically wipe everybody out, which is my problem. And everything that we have here, the banking industry, the regulations allow the big banks to break down the little banks. Retail, you've got Amazon putting everybody out of business. All right, Walmart and Amazon. It's a bigger problem. I don't know what's going to happen. I don't know how it's going to resolve out, but I don't think that this will have a pretty ending either, because I do believe that once they accomplish the overall goal they set, you'll start to see prices start to rise on their side, because we're all so conditioned like Pavlov's dogs. Amazon. I'm just as guilty of it myself. When I need something, the first place I go is Amazon. In the meantime, something to watch for. Let's see how it plays out, but I don't think it's going to end well. That'll do it for today's show. This is Bubba's Bottom Line, Todd Bubba Horwitz. Have a great weekend, have a great day, and we will see you back here on our daily updates, as well as back next week on Bubba's Bottom Line. Have a great day, everybody. Thank you so much. We'll see you later.